Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune in my show, you're going to hear about topics that are important to the home business community. Today, I want to talk to my home business travel agents, okay? Let's talk about this. I have up on my computer here a post that I saw, so I'm going to read it to you, and then we're going to go through this and really debunk some of these myths that are going around the travel industry that I've seen over and over again. So we just want to get this fixed, okay? At least for the travel squad that's in my audience. How about that? Okay, so here's the post. It says, does this make sense? I traveled a bunch in 2017. All of it is a tax write-off. What does that really mean? Well, when I do my taxes, there's a line item on the schedule that allows you to put in the expenses for your travel. That amount is then deducted from your tax liability. If your tax liability is low, it increases your refund by that amount. I.e., $5,000 in travel can equal $5,000 extra on a refund. If you owe, that is deducted also. If it is high, you can reduce your tax debt to Uncle Sam. Example, owe $7,000, $5,000 in travel. Now you owe $2,000. Owe $4,000, $5,000 in travel, debt paid, refund $1,000. What better way to pay your taxes than with your travels instead of your paycheck? Okay, so I am going to pick Mr. Man apart here and really help you get this right, because unfortunately it's this type of thing, these type of posts that lead people astray and just are begging for you to get audited. All right. So first of all, please understand that this man is not a tax professional, okay? He is not a tax professional. He is not a CPA. So listen, do not take your tax advice from your friends who are not tax professionals or CPAs, okay? Because what happens is you get the street committee tax advice, and then when you get in trouble, who's got to pay for it? You do, not the person that gave you said bad advice, all right? So number one, and I will always caution you, is to not put your business on Facebook or any other social media, because Uncle Sam does use Facebook, your social media, to build a case against you when you're being investigated. So if you're putting your stuff out there all willy-nilly, they can use that to build a case against you and convict you. Okay? Just letting you know. All right, so that's number one. Number two, the number two myth is all travel is tax deductible, and that is not true, okay? Your travel has to have a business purpose, okay? It doesn't matter what it is. You know, even in the travel industry, if you do not show a business purpose for a said trip, if you do not have a business purpose for a said trip, it is not tax deductible. And just in case you want to know, in the 2015 case of Lee versus the commissioner, the tax court ruled against Lee, that will be the taxpayer, after she claimed that expenses for cruise travel with her companion enabled her to advise prospective travel agency clients. She claimed that any information obtained through her travel was useful in broadening her knowledge that she would convey to others. Now, that sounds all well and good, but again, if you do not have an intended business purpose for your trip, it's not tax deductible. So what does that mean? That means you got to have documentation. You've got to show that you had a reason for taking the trip. That means you can't just say, I'm going to go on a Caribbean cruise and I'm going to write it off and I'm going to, say it was for business purpose. No, in order for it to be a true business trip, the business has to be established first, meaning that you have set some meetings, you have, with whether it's, cruise directors, if it's, hotel managers or something, that has to be established first before you go and plan this trip. Okay, you can't just decide, okay, I'm gonna just go hop on this boat and I'm gonna write it off as a tax deduction because I'm in the travel industry and this is what I do. That's not how this works, okay? So not all travel is tax deductible. You have to have a business purpose and you have to document like crazy, because the travel industry is one of those industries that's like an IRS red flag when they see you off getting your life on all these trips. And then they're saying, okay, let's go make sure there's a business purpose for this trip. Okay. Number 2 tax myth is that you will not get audited. Okay. So let me talk about this whole audit thing. Like, you know, the thing about audits is this. When you're talking about a Schedule C, which is where most people have their businesses, okay? If you are a sole proprietor or if you're a single member LLC, you are filing on a Schedule C. That is on your personal tax return, okay? And Schedule Cs, because they are so fraught with fraud, I mean, there are people, there are tax preparers that are going to jail because they have filed all these fraudulent Schedule Cs. But so this is where auditors cut their teeth when learning how to audit on Schedule Cs. So while you're sitting up here trying to put all this stuff on your Schedule C, your chances of being audited are going up. It could be a mail audit, which is when you get a letter from the IRS that says, hey, we'd like to know more about this. That's just not just a nice letter from the IRS. It is a mail audit, okay? Up to the field audit. That's when they come to your house and they go through all your stuff, okay? So, so the belief that you will never get audited, that you will never get caught is so wrong, okay? Let's just say that. All right. Number 3, one of the things that that this person mentioned in this thing is talking about reducing your tax liability or increasing your refund. Let me settle this myth right now. If you have a business, okay, the only way that your business either reduces that tax liability or increases a refund is if you are operating at a loss, okay? Because that loss then reduces your taxable income. So you can only do that for so long. At year 3, one of the things that the IRS looks at is, have you been in profit 3 out of 5 years? So at year 3, if you're still operating at a loss, you're probably going to get a letter from the IRS saying, hey, we'd like to know more about these expenses. Because see, if you're doing it right, when you're in business, you are going to pay taxes at some point. Okay? That's just the way business goes. Business owners pay taxes. If you have not paid taxes with your business, if you are still showing negatives in your business, something has gone horribly wrong. Okay? So if you're growing your business the way it's supposed to, you are going to pay taxes at some point in your life. And if you don't think the IRS will come for you, let me share something with you. There's a case of a couple in Florida that was just settled, I want to say 2015 maybe. And they were with a popular network marketing company, and they had the couple, husband and wife, both had 6-figure jobs, okay? But with their network marketing business, they were showing these losses, okay? Which means they were going to all the meetings, they were going to all the events, they were buying the products, right? But they were still showing operating at a loss. So the IRS audited them and said, hey, no, you do not have a business. You have a hobby. And oh, by the way, you owe us a whole bunch of money back, because they were posting these losses. And I think they did it for about 5 years straight from the case that I saw. And so they're going to have to pay that money back. Okay. Because the IRS disallowed their expenses. So there is case law and precedents to show you that, yes, this does happen. It might not happen to you right now, but if you continue operating at a loss, oh yes, give it just a moment. It will happen. All right. So do not think that you can continue to show negative on your Schedule C, that you can continue to show a loss and keep getting money back from the government. That's just not how the IRS gets down. All right. They expect a new business to operate at a loss because you are investing money and you haven't exactly sold anything. So they're expecting a loss. But by year 3, baby, if you still showing a loss, you can start expecting a letter from the IRS at any given time. So do not subscribe to this idea that having a business increases your refund or reduces your tax liability. That is not the case. All right. If you're doing what you're supposed to do, growing your business the way you're supposed to, you're going to pay taxes at some point. All right. The other thing that this person said is that when I do my taxes, there is a line item on the schedule. When I do my taxes, here's the thing. Okay. You need to understand that when the IRS comes for you, they're going to ask you, did you get some professional advice? Did you have a consultation? Did you get a business coach? Did you get somebody's opinion other than your own? Ignorance is not a defense with the IRS. People get, the tax software and do their taxes. You're assuming that you know what the tax professionals know. You're assuming that you know the rules. And that's not always the case, because a lot of times what you get is the street committee advice. Then you go to this tax software. The tax software is going to do what you tell it to do. It's only as good as the numbers that you put in. So if you're putting in false numbers, it's going to give you a false response. And you're going to think of it like, okay, yeah, this is what it's supposed to be. It's not going to be asking you questions. That's not what software does. It just does what you tell it to do. So as a business owner, you need to show where you've gotten some consultation, okay? That's just what it is. If you haven't gotten any professional advice, that doesn't count to the IRS. Like, oh, well, you just owe us this money and we'd like it within 10 days, please and thank you, okay? So let's talk about, how this works going forward, okay? What do we need to do differently here? So number one, if your business is operating at a loss, like this gentleman is talking about, like, I don't think he really gets, I really don't think he gets what he's doing. I don't think he really gets it. He's just looking at the bottom line of I'm getting a refund or reduces my liability. So when your business is operating at a loss, it's not a dollar for dollar reduction on your tax liability. It's a dollar for dollar reduction for your taxable income for your business. But by the time you get over to your personal side, it is a percentage. So number one, his math is wrong. And then, like I said, if you are continuing to operate at a loss, you are really inviting an audit. You are waving a big old flag that says, hey, IRS, please come audit me. Okay, really, that's what it boils down to. And let's see, what else is he saying here? Okay, so let's talk about, for my travel folks, with the valid business reason. Okay, so when you're traveling, if you are, going to, let's talk about Jamaica, because I'd really like to be in Jamaica right now. But let's talk about Jamaica. So you go on this Caribbean cruise to Jamaica, wherever else, right? And then you're meeting with, like I said, a cruise director, a hotel manager. You're talking with the wait staff. You're looking at the number of passengers. Are people having fun? How are you documenting this stuff? Okay. Number one, you've got to document. You have to be specific. You need to keep every receipt. You need to document every person that you talked to, every meeting you had, everything. So there is no doubt in the minds of anybody that you were there for business purposes. Shoot some videos, talk about the hotel. You got Facebook Live, you got YouTube. There are so many ways and so many things that you can use to really establish that business, that business purpose. And so, then when you come back, how are you marketing it? How are you packaging it? See, these are all the questions that the IRS is going to ask you. They're going to say, yeah, you had this trip to Jamaica, but how many of these trips did you sell? How many of your customers did you talk to? Which customers did you talk to? These are the things that the IRS is looking for as documentation as to whether or not you really went for a business purpose and that you were actually trying to market these trips that you went on. So no, you can't just go on all of your trips and claim they're a tax deduction. That is the biggest falsehood in the travel industry that exists that I have seen. So if you've got people in the travel industry, I really, really want you to share this with them, because as we go into the future, people need to get this right. Because see, when the IRS comes for you, the person that, that told you this information, they're not the ones that are in trouble. You are going to be the ones that are in trouble. You are going to have to pay that consequence. Okay? That's what it boils down to. All right. So I really hope this helps you out, my folks in the travel industry. Hey, I'm for it. Go get your life, get your travel on, or whatever. Just make sure that you understand what is tax deductible and what is not tax deductible. Okay. So thank you so much for tuning into Home Biz Tax Talk. Again, we are here Monday through Friday, 9 o'clock-ish, and you can come here to get your tax questions answered about your home business. All right. Have a fantastic day, and I'll see y'all next time. Bye.